Hey traders, checking in on the stock market today. It's been a rainy robe kind of day and I'm not getting dressed today and you can't make me. So we've got QQQ, key daily support level in play. We've got the S&P 500 holding on strong as our other sectors were notable. I'll go over the two scenarios on what we're going to see play out if we see QQQ lose the daily uptrend. Aside from that, the metals had a very strong day. USMJ had a very strong day. We'll look at both of those sectors. And I made a failed day trade bounce attempt where position sizing was key. I'll show you why. All right, so checking in on SPY, we have closed lower than we have opened 5 days in a row, but the close today was the second highest close of all time. So it definitely looks like the bulls are tiring out a little bit, but really what's going on, if you're looking under the hood, is rotation. And we're watching to see if QQQ loses the daily uptrend. Do XLV and XLF offset that weakness? Today, they did. So looking at QQQ, we had the bears take over today, break the low of Friday. It was a daily inside bar that broke bearish. As soon as that level broke, the momentum picked up to the downside. You can see on the 5-minute time frame here, the stop losses on this candle, very significant on that daily inside bar bear break. And we ended the day with an hourly bear flag closing right at the low. So that being said, we are looking at a couple key things. Number one, QQQ, daily higher low support. First off, we have a triple top. Second off, the daily higher low support, 333.97. That is the level for this week, because if that level breaks, the daily higher low pattern is lost, and in my opinion, it's lost for the first time in a month. And then we zoom out and we scout a weekly higher low. But it'll be notable. And the weakness we're seeing, we saw Apple with a big beat in earnings and Amazon with great earnings, and they're selling off. So we're now seeing an exit out of the tech sector now that we are past the main event earnings week last week. And the question is money going to leave the market, or is money going to find a new home in other sectors? So the reason that SPY had the second highest close all time and QQQ wasn't even the highest close, we've had 10 closes higher, it's because XLF, second highest close of all time, and XLV, big green day. Daily inside bar bull break. And again, what I said last week in a video was, it's notable to me that the second largest sector holding in SPY has been pulling back for 4 days, and SPY was still at all-time highs. Why is that notable to me? Because that tells me that XLV, the bulls are ready and waiting. When some other sector needs a breather, they're ready to set a daily higher low. So our daily higher low is now set at 120.103. We would need to see a failure to break the all-time high and a break of that level to confirm a daily downtrend. If we hold 120.103 support, the bulls keep complete control, looking back at the all-time high. So QQQ key support, again, I'm still in my SQQQ position, and today was just the perfect day for my swing trades because the metals were on fire, the USMJ sector was on fire. The only swing position I had that was red was the biotech sector, but my SQQQ position completely offset the drop in my account related to the biotech sector swing, and that is the perfect hedge, essentially. So I will keep holding it as long as the triple top at the all-time high remains, and 333.97 is the level to be watching tomorrow. One thing to note is we will be in oversold conditions if that level comes into play soon. The hourly RSI on the NASDAQ futures chart would be oversold on another leg down. Where's our support on this futures chart? It's this double bottom down here. So we're keeping an eye on 13,717. So we would see hourly oversold conditions if that came into play, and we would also see 4-hour oversold conditions if that came into play. And the 4-hour RSI has not hit oversold since early March. It's almost been 2 months since that has happened. So we can watch the bulls potentially play defense with that support level because the RSI levels will be extended. Tomorrow's going to be a very interesting day with QQQ. IWM, daily inside bar today. We're scouting a daily higher low. If the inside bar breaks bullish, our daily higher low is set, and that favors continuation due to the size of the retracement. It's a little bull flag. If we break the inside bar bearish, we'll then be watching for the potential of an equilibrium as the retracement will then start approaching the 50% level. So XLF is all bulls, higher low every single day for the last 8 days. When that pattern breaks, which is likely soon in my opinion, the bulls have tons of space for a daily higher low. Who just did that? XLV just did that. Higher low every single day for a bunch of days, break the pattern, daily consolidation, no red flags. So again, the two scenarios, well, three scenarios. QQQ holds the daily support, bulls keep complete control in the broader market. QQQ loses daily support, our other sectors stay strong, and that strength offsets tech sector profit taking. In the third scenario, QQQ loses daily support, other sectors show weakness, healthcare sector confirms a daily downtrend, financial sector starts consolidating, and we see notable weakness in the broader market. Biotech sector, pullback, red Marabozu day, so not a good day. Close at the low, and I said ideally we want to hold these EMAs on a back test to favor a trend change. Because we are closing at the low, our retracement size at this point is now approaching, well, it's still right there, 40% retracement. Any red tomorrow, and we'll be approaching the 50% retracement, which then means rather than favoring a trend change, it is still possible, but we would need notable bull volume to do it. We would be scouting for the potential of an equilibrium to tighten up. The bottom line is the biotech sector bulls have not confirmed a trend change since the all-time high. Remain skeptical of bulls until they do it. Look at the EMAs. We were on the verge of the first bull cross, and we are rejecting right now because of today's candle. The only reason I'm still comfortable in XBI is because I took half profit into the strength. So very comfortable with where my break even on the trade is, and I am giving the bulls a chance to shift momentum. Have to change the hourly trend back in favor for the bulls to set a daily higher low. TAN is right on top of support, 80.98, 80.80. Week close 2 days in a row. That being said, we have dropped 10% in the last 5 days. There is a potential bottom fishing play to be watching tomorrow off of those support levels. I would give a little bit of wiggle room, considering we broke support by 9 cents last time with no bear follow through. But again, we need an hourly trend change back to the bulls for a daily higher low to try and shape up. And even then, we would just be scouting a daily lower high to be the result of the next bounce. MSOS, gap up open after the very strong day Friday. Look at the volume. It's definitely increasing, and that is notable. We have earnings for the sector approaching next week, and we had a Barron's article cover talking about the sector, which is adding to some of that Friday and Monday bull action. 44.68 is the resistance level. If we fail to break that level, it's an inverse head and shoulders to be watching, but MSOS has to confirm the trend change still, and we're scouting a monthly higher low, and we're close to setting it. I do want a daily trend change, but if we break 44.68, that is a monthly higher low being set. The VIX, holding well, all things considered. So low, high, higher low is 1670, and if the bulls break 1990, that's the first convincing and clear daily trend change we've seen in a long time. We've seen these spikes up with no follow through, but as far as, a 4-day, 5-day bounce, 4 or 5 days of consolidation, it'll be notable to me if these bulls are able to change that trend in their favor. And the way that it would break out is if we see money leaving the market and all of our sectors showing us weakness and a QQQ loss of the daily higher lows. The dollar, big bull day Friday, giving a lot of it back. 4-hour equilibrium on watch. We're scouting a 4-hour higher low. Then we'll scout a 4-hour lower high overnight and watching for the 4-hour tightening range. Bigger picture, I must see a confirmed daily trend change back to the bulls if they're going to convincingly shift the momentum back in their favor after the bears owned April. Metals had a great day. Could have asked for anything better, especially considering the fact that the dollar is not at its low. We are 0.5% above its low, but gold trying to confirm follow through. 1798 is still a double top. But if we can clear 1800 tomorrow, 1816 is then the next level. And as we ended last week, we were watching this 4-hour pattern. And it broke bull with really nice volume. It's a very impressive day for metals today. Silver as well. Silver convincing bull break. It's a weekly bull flag. No, it's not. It was an inside bar bull break. It was gold that gave us a little weekly bull flag. So, with this move on silver, next resistance level, we're at multiple month highs, 2-month highs, and I'm looking at 28.33 as the next most important resistance level from here. Silver a bit stronger than gold over the last couple weeks. We had a 4-hour pattern on silver that we were keeping an eye on. And again, it broke bull. So pleased with these swings still. Sloppy, but channel. The volume very notable. Hourly bull flags right now too. We'll see if those can confirm overnight for follow through. Miners did act as a laggard today. The miners started much lower comparatively than where the metals were starting. And I thought it might have to do with the fact that miners are about to head into earnings. Keep that in mind if you're trading miners. But miners controlled the majority of the day with a 2% move from the open. So it was a bit of a laggard to those metals this morning. And plenty of space for an hourly higher low. That being said, the miners are scouting a daily lower high. Earnings are going to dictate a lot in the short term with miners. And that's the reason I'm choosing to trade the metals and not the miners. I don't like that coin flip. You know, gold and silver can be really strong, but if we have a miner giving poor earnings, it's going to drop. Oil, daily bull flag attempt, very strong. Trying to set that higher low at 62.91. No red flags for the bulls. We need a 4-hour trend change back in their favor to be looking to try and confirm this daily bull flag. And then the high, the many-month high, is right back in play from there. Natural gas daily bull flag trying to confirm. Triple top at 2908. Hourly equilibrium is tightening up. If the hourly equilibrium breaks bear, we have to be cautious of losing the daily high or low support of 2809 on that double top. If the hourly equilibrium breaks bull, daily bull flag confirmed, 2965 is the next resistance level. So watching how our sectors are going to interact. Today, XLF and QQQ were inverse to each other the majority of the day. And again, when they show up as inverse, we know they aren't going to go at the low of the day at the same time, because it's almost essentially ensuring that one of them is going up while the other one is going down. So, day trade I took today, MNMD. So after the multiple week maker last week on the way up, now I'm starting to scout for that daily high or low. Today I was just way too early. Made an initial entry pre-market because the double bottom of 375 was holding and some bids were showing up. And I know that I'm distracted when I'm live streaming and covering tickers and answering questions and watching. Again, when the bell rings, the first 15 minutes, I am just staring at our major sectors and watching how they're interacting to each other and watching how they're reacting to their key short-term levels. So I was a bit distracted. I am always a bit distracted. So I wanted an initial starter position very, very small, entered at 380. And then my game plan was, okay, if the bell rings and we see another leg down, I'll make a second entry. And we dropped hard. If I had a normal position size, I would be down 2 week makers right now. I would give back the entirety of my big gains seen on the way up. But I know to trade with a very small position comparatively because the percentage moves are so much larger. So with my initial entry at 380, I needed to drop down to the 320s to be a day loser. So I made an entry. The bears kept control the vast majority of the day. There were some bounces in there though, and the bounces did have, a solid 5-6% of follow through. So I did do a couple flips, some short-term trades to lower my cost basis, and I kept dropping it down from 380 to the 370s to the 360s to the 350s, just doing little flips. I was flipping for 4 to 10 cents at a time. I did it maybe 3 or 4 times, and I exited at the end of the day because it was an hourly bear flag. So just an example of one of the bounces. We have the low of the day, 322. High of the bounce is 340. Red flag by breaking. Nope, no red flag yet. So bounce to 340. We then drop down. I'm on the 15-minute time frame and saying, okay, I'm just looking for a 15-minute lower high on this bounce. And I know we will need a 15-minute trend change if the bulls are going to get any follow through. So we top out at 340, and we then waterfall drop back towards the low of the day, 322 support. So I'm on the 2-minute time frame, and I'm seeing this waterfall drop, and there was a big bid at 326. As soon as I saw that big bid, I market bought. I was filled with an average just under 327, and that then marked the low of that pullback. So I was able to make that little flip for 1.4%. And again, it's just dropping my break even down. And I'm always going to flip my second position entry really quickly, because if I'm only willing to enter 2 positions, once I enter my second position, I'm out of ammo and I'm out of control of the trade. So if I flip it real quick and I sell it for a 4 or 5 cent gain, I drop my cost basis of my original position, 5 pennies, and I've got my bullet back. And I can keep trading with that half position. So in the end, it ended up being a 60%, maybe a 3/4 of a day loser with this day trade attempt. But the most important factor is I'm heading into tomorrow with a clean slate, and I will be watching for the same trade setup. And it's just supply and demand. We had a massive sell the news event. We topped out, and at this point, we've pulled back 60+%. Come on, TradingView. That's not the daily. We dropped 60% plus. I want to see a gap down open tomorrow. I want things to get as extended to the downside as possible. And the most common scenario on this kind of setup is an equilibrium. Massive breakout. We hit the high. We pull back and we look for a higher low. Anything above 205. We're going to bounce eventually. We'll look for a daily lower high. But that bounce will likely see 15 to 30% of upside to it. So I'm going to be watching for that play again. My position sizing will stay small because I'm not going to give back the profits from last week. And in the end, a little loser. We'll try again tomorrow. And again, if I'd had incorrect position sizing, if I did not have any stop losses in play, this could easily be an I just gave back 2 weeks of profit with 1 bad trade scenario, which we have to avoid. So we'll see if we get a gap down open. A little bit of extended hours weakness. 342 is the most important resistance from here. The red flag, I'll show you the red flag for the bounce. High of 342. Well, there's 2. We had a high of 340. We broke it by 2 pennies with no follow through. Instantly, I think hourly bear flag when that happens. Trend change with no follow through. Zoom out and scout a flag. We then failed one more time to break that level by 2 pennies, and then the bears completely took over and we dropped 10% from there. We are correlating to QQQ, which is weak. That definitely had an impact here in my opinion today. I was watching them very closely and they were correlating more than I've seen ever before. And it makes sense. We're now listed on the NASDAQ, so I will continue to watch how those correlations morph and develop. But we're watching for the scales to tilt between supply and demand for an extended temporary bottom to be set for a solid oversold bounce. I hope you had a good day. We'll check back in tomorrow and see if QQQ bulls are able to defend support. Establish those game plans. You can be bullish some places and bearish other places. This current market environment has plenty of individual bear plays and plenty of individual bull plays. Just want to be focused on the names with the trend in their favor, ideally, even if it's bigger picture, like focusing on NIO or MSOS for a monthly higher low, even though the daily and weekly charts are still potentially in downtrends. Do good things. After 2 years in a row, no birds took this nest this spring, which is right next to my office. And I see the variety, forget exactly what it is, but there's a bunch of them down in the barn, and I've left the barn doors open all winter intentionally to try and get birds to live in there, and I think they moved into that spot. This is Sochan. My buddy gave me a little piece of it last year, and I planted, and it's certainly taking hold in year 2. And it's edible, but I'll rarely eat it. It's the kind of thing that I'm just playing around and having fun, but sticking as much edible food in the yard as possible. So if I ever needed it, I've got a big source of food all over the place. This is the fig tree to be transplanted. These are all the flowers to plant over the next week or 2. Last year I did sunflowers along the driveway, which was good, but this year I'm going to do zinnias. But we are not positioned well in this sector for any broader market weakness. We have a triple bottom of support. We have daily lower highs being the result of every bounce. Scared the out of me. Turkeys. 2-day equilibrium